and just if you haven't introduced yourself in the chat box, please do, so she knows who's in the room. Lindsey.
Great, thank you. Can everybody hear me okay? Great, okay. Okay, so I believe, am I driving here? There we go. Okay, so thank you all for letting me join you today. This came about through a couple conversations with the Sherwood Foundation and talking to them about fraud and some trends that were happening there that they were seeing. And so they connected me with Anne, and so I'm really excited to be sharing this information with you today, because this isn't something that's necessarily exciting to talk about or that you want to spend your time on, but it is really important just because we've seen such a massive uptick in fraud, and specifically within the nonprofit industry. And so we wanted to share some trends today. And these trends are coming from a recent survey that is held by the AFP, it's Association of Financial Professionals. They do a survey every year of about 500 corporate finance practitioners and asking them, what are the trends that you're seeing in your industry? And this spans all industries. So it's not just nonprofit, it could be for-profit, oil and gas, C&I, CRE, et cetera. So it spans the horizon of different industries. So a little bit about me. I've been with Security National Bank for a collective almost 10 years. I spent about 6 over at First National and 3 in Denver. So I've been working in Treasury Management for quite a while in different capacities. I work in sales now and help clients with what we'll talk about today, which is fraud prevention. How can you make sure that every single account you have is protected from the bad guys? What are the ways you can protect yourself through products and just through education of your staff? Okay, so when we look at the survey that was done, and this won't surprise any of you, I'm sure, but the number one key concern in fraud is business email compromise. And these are coming from really spoofed emails, but we're seeing the biggest losses coming from fake emails to your group and to your nonprofits. And so if you want to, let's see here. Sorry, I just want to make sure I can change slides here. Erin, could you maybe give me the ability to run? Okay, we'll pause. So back to business email compromise. As you'll see here, 71% of companies that were surveyed, of these 500, were victims of a fraudulent email. Now, that doesn't necessarily mean that they lost money because of it, but they've all been targeted. And so everyone is being targeted regardless of your size or your industry. And typically with those types of email compromise attempts, it's typically wire transfers that they're trying to get you to send out. And so they are pretending to be the CEO, the executive director, and emailing the CFO and saying, hey, we're going to make this large purchase or this large CapEx that we have planned, and so go ahead and send this wire transfer out, and it's via email. And the emails look very real. They look like they're coming from you, and they look like they're from your email address. And so there's been a lot of companies that have fallen for this, and they've lost money because of it. Because once that wire transfer goes out, it is gone. Typically, the wire transfer has been sent to a bank within the United States, but then minutes later, it is then sent out of the country. And at that point, your bank will be, it's impossible practically to recover those funds. There are also the fraudsters within these business email compromises. They're trying to target with ACH debits, which is a way that there is a way for you to protect yourself on that end as well. But when we get into the meat and potatoes of this, it's really a lot about education and then products. Okay. Erin, I'm not able to, Thank you. I don't know if that was me or if that was you, so thank you. Most prevalent types of the business email compromise, the spoof email, the one pretending to be from the executive director. Then we have the domain lookalike, where the address in the top looks very, very similar to you, but it's not. And then the other percentage, which is still quite high at 54%, is a legitimate email your email's been compromised by a fraudster. So someone has taken over your email account. I've seen this happen before, where I've received emails from a legitimate email address, and that particular person sending the email, they had taken over and then rerouted my responses to a separate folder within Outlook. So they had put a rule in place that any of my replies were hidden from the recipient. So they had been completely compromised in that sense, and they were asking me to wire money to Hong Kong for them. So of course there's red flags there that we noticed, but this is what's happening, and people are falling for it, and it's quite scary. Okay, the typical scams we're seeing, and this really does drill down to what we're seeing locally, what I'm seeing with my clients. We'll see an email come through from a purported vendor saying that they've updated their mailing address for payment. So your vendor says, we changed addresses, we moved locations, send your check here next month. Now, I've had multiple clients fall victim to this. Because you'll get a notification from them in 3 months saying, where's our payment at? But you've been mailing the checks, they've been cashed, it's been 3 months, you think everything's fine. Well, somebody has infiltrated and started receiving those checks and depositing them. So you really don't have any recourse at that point. So what we always advise clients to do is, when you receive an email from a vendor or someone you're paying that says, we've changed our mailing address or we've changed our payment instructions, always, always, always follow up with a phone call to the vendor or contact that you know personally. Never reply to the email, because that's where they're going to convince you that this is legitimate. And this happens more than you would think. Next one is an example. The CEO asked to purchase dozens of gift cards to send out as employee rewards. We see this a lot during the holidays. We'll get the email saying the CEO wants us to buy Visa gift cards. Not necessarily uncommon, but you're not, as a CEO or executive director, going to be emailing an assistant and sending them out to go purchase thousands of dollars in gift cards with an email request. So this is typically going to be a red flag too. And then a fraudster posing as a vendor, again, providing new bank details. So if you are paying your vendors electronically, this is even more of a concern. So when they provide you with a new bank account, always follow up again with a phone call to the contact you know, so that you can validate that that is actually legitimate. Because people do change bank accounts, and they do move locations, but always verifying that it is legit. And these are things that I would share with your CFO, with your controller, with your director of finance, to make sure that they are aware and they are on high alert along with the members of their team. Okay, when we look at payment method vulnerability, checks are still the most risky form of payment that are the most vulnerable to fraud. And that is because it's so easy to make a fake check. It is very easy to wash a check, to print one. All you need is a really nice printer, order some check paper and some Micker ink, which is easy to purchase off of Amazon, and you can start producing checks yourself. And what we've seen is that a lot of these fraudulent checks that come through they look totally legitimate, they look very good. They may not have a matching signature. I will tell you that your bank is not matching your signature. They don't look at the signature line. All they're looking at is the information on the bottom. So your check could actually have your bank account information at the bottom of it, but a different logo in the corner and a different company name completely. You know, it could be Keep Omaha Beautiful's information at the bottom, but Nonprofit Association of the Midlands logo in the corner. And that check would go through without issue, unless you have positive pay in place, which we'll get to later. So being cognizant that checks are still the most risky and the most vulnerable to fraud, However, most companies aren't going to change the way that they're doing things and just stop writing checks. It's kind of impossible to just turn that off. Of course, there are other ways to make payments via a corporate credit card, a commercial card, a wire transfer, which is a little more expensive. You can send an ACH transaction, also a little more expensive, but those do have more protections in place. And so it's, while checks are the most vulnerable, companies are not planning on stopping writing them anytime soon. You simply just sometimes have vendors that demand a check and they won't take anything else. Okay, so along the lines of fraud controls, what's important for us to talk through are a few things. The first being the 24-hour rule. And you'll see on this right-hand side this time taken to discover fraud. Now, we say 24-hour rule because let's say you see a fraudulent check post to your account a week after it's posted. So you saw that it posted on May 31st. Today's June 6th. You're doing your reconciliation from last month, and you see a check that's on the register that you don't recognize. So you contact your bank, they tell you it's fraudulent, and they're also probably going to tell you it's too late because you have 24 hours from date of posting to notify your bank to let them know that there's been a fraudulent item that posted to your account. That 24-hour rule is put in place by the Federal Reserve, so it is not driven by your bank. This is the rule that your bank has to follow. Now, your bank will typically try to get that money back. They will do everything they can. They will send letters, they will send typically 3 or 4 letters to the bank on the other end requesting, just send us whatever is left in the account that stole money from us. And I've had it all come back. I've had a $40,000 amount come back because that bank held the funds. They thought it was suspicious. But I've also seen a loss of about $30,000 and $17 came back. So when these checks are perpetrated, the person on the other end is taking all of that money and withdrawing it and closing the account. And typically that account was opened under false pretenses with fake identification. And so the bank on the other end doesn't truly even know who this person is, or they were a mule for a large check cashing ring. So it is important that you validate and check and reconcile your accounts every day. Because if a check comes through and you don't catch it, you will be on the hook for that unless your bank is able to get the money back, which is just highly unlikely and not something you want to bank on. So daily reconciliation is a great way to prevent this from happening, but there's also fraud prevention tools that you can put in place. And I will tell you, this is what we talk about ad nauseum, is fraud prevention and making sure that you don't have losses and you can prevent this from happening. Because once you've had your account compromised, typically your bank's going to say to you, you've got to put in some tools or you've got to close this account and start over. And if you've ever gone through that process before or you've changed banks before, closing an account and reopening is a major pain, and it's a lot of work and a lot of transition, not to mention all the costs involved with purchasing new check stock and deposit slips and all of that. And so you'll notice that most companies don't catch it right away. So this is not uncommon. People do not reconcile their accounts every day. And so if you're not doing that today, it's okay, but it's something that we want to make you aware of, is that it's such a finite period of time where you can catch this and get all of your money back. Okay, so how do people prevent fraud from occurring on their account? Positive pay, which we'll get into detail in the next slide, is the number one, and that is the best way to protect yourself against fraudulent checks posting to your account, followed by daily reconciliation, segregating accounts, payee match positive pay, which is the standard now, I would say, which is just the bank matching the payee name on the check. Tamper-resistant features on checks I don't find to be that effective, and you'll notice that the effective percentage, 34 say very effective. But I mean, it's just so easy to clear a check through that looks legitimate. A post-no checks restriction on depository accounts. This is also referred to as a check block. This is an effective solution when you are not writing checks. So if you've segregated accounts and you have payables and receivables, a check block on a receivables account is a great idea because you do not have any checks coming out of that account anyways. So while you're sharing that account number with a lot of people, they wouldn't be able to actually create a check and post against it. Reverse positive pay, it's basically like positive pay except that you're not uploading a file. We'll get into that. And non-bank fraud control services, couldn't even tell you what they're talking about there, but this is, number one, is going to be positive pay for you to protect the account against check fraud. So recovering funds, as I've mentioned, it's fairly rare, but over half of the organizations that were surveyed with revenue of less than $1 billion were unable to recover the funds lost. So that's a lot. And I'd tell you that's typically what we see, what I see on my end as well, is that when there is fraud, rarely do we get the money back. I mean, there's probably been a handful of times I can count that we were able to do it, to get all of it, maybe a portion of it. So when you think about the funds that you're keeping in those accounts that you're a steward for, you want to make sure they are protected because these are restricted funds sometimes, these are donations, and you want to make sure that they're protected. So protecting those, we've got a few tools to talk through. The first being positive pay, and we briefly touched on this earlier. How positive pay works, and some of you might already be using this, hopefully you are, is that you would export a file from your accounting software every time you do your check run. That file is pretty basic. It's a CSV file. It's got the payee name, the account number, the check number, the check amount, the check date, and that information is all uploaded to your bank. And once the checks start clearing through the bank or somebody walks in to cash a check at the teller line, your bank is going to match that file up against the check, and they're going to match every field. And if something doesn't match within that record, they will contact you via email and tell you that you have an exception to approve. And typically, if they don't hear back from you, because maybe you're closed that day but the bank is open, they're going to return that check. If you have positive pay in place today, I would recommend that you review with your bank your default decision to make sure it is to return it and not pay it. Because the last thing you want to do is pay a check that is actually fraudulent. And I'll tell you that fraudsters are watching your emails, your behaviors, et cetera. They know when you might go on a shutdown. They know that it's a thin staff over the holidays, or you have an event coming up, so they're going to target you with a wire email request. So making sure that that's squared away with your bank so that you have a default return policy, but also making sure that multiple people are receiving the exception emails for positive pay. This is the number one way for you to prevent fraud on your account. And it goes back to that 24-hour rule. You only have 24 hours to catch a fraudulent check. And that's with daily reconciliation. So instead of reconciling daily, all you would have to do is simply tell the bank, these are all the checks that we wrote. And then if somebody does try to come in and clear through a fraudulent item, it's going to be caught through this particular process, and you'll be notified with enough time to make sure you can return the check before you have any losses. You also don't need to close your account and completely start over. On the ACH side, this is creeping up in popularity as far as we're seeing more fraud from ACH because it's easy to perpetrate. All somebody needs to debit your account through ACH is your routing number and your account number. And you know this from paying your own personal credit card bill. You put in your routing and your account, and that's it. No one ever verifies, is this actually Lindsay's account number that she's paying her credit card bill with? They don't verify that, and they frankly don't care. So what I've seen a lot of is companies will see that there's an Amex debit to their account or an OPPD debit to their account, and they just assume this was mine because I see this regularly. Well, in fact, it was someone else using their account number and routing number to pay their bill. And this has gone on for years before with a client that I worked with where they just thought this is the way that they bill us. And their employee had taken their account number and started paying their bill, and it went on for years, and they were never caught. So with ACH Fraud Filter, the way that this works is that you get to decide which vendors are allowed to take money from my account. And you can determine that through letting them post first and then adding them to a list so that they're approved going forward. You also can put in dollar thresholds to say, if it's from OPPD, it can only be $500. And if it exceeds that dollar amount, you get a notification via email that says you've got an exception to approve. Again, you have enough time here within that 24-hour rule, the bank's telling you, so that you can make a decision on that item to make sure that it posts or doesn't post, depending on what you want. And then account alerts are really important. So if you don't decide to put any type of fraud prevention in place today, at least putting in account alerts through your online banking portal to be notified when a large check clears or when an account hits a particular low balance. Just knowing when things happen on the account can give you a little bit more of maybe a safety net to catch something before it's too late. And I would tell you 92% of organizations use Positive Pay to guard against check fraud. So this is the number one thing that we are recommending to every single customer we get in front of that is a commercial client. And I should just a caveat, as a business account, because you're all in commercial business accounts, you have 24 hours, as I said, for the fraudulent transaction return timeline. As a consumer, so as you and I, as a consumer, we have 90 days. So it's a major difference. But if you notice something on your personal account, you call your bank, you tell them it's not legitimate, they give you provisional credit, they go research it, they give you your money back. Everything's good. As a business, it is so much different, and it doesn't really seem fair, so we have to work within those confines. But just wanted to call out the difference between the two with consumer versus commercial accounts. So measures that you can put in place to improve internal controls within your organization is educating your staff about noticing, identifying those business email compromise scams, the fraudulent attempts that are coming through that are attempting to get you to share account information or to change your account information to send out wires or to change a vendor's information. And a continual or annual review of internal policies and controls, making sure that everybody knows this is our wire policy. We have dual control. Here is ACH, dual control. Making sure that you have controls in place so that money cannot just be sent out without a secondary approval or a secondary signature, or even when you're updating your accounting software with a new vendor's information, that not one person can just go in and update it. There does need to be a process to validate that so that you're not changing it to something potentially fraudulent. Meeting regularly with your banking partners. So hopefully after today, and if you aren't doing this, you should be, having an at least annual meeting with your bank to make sure that you know what products and services are available to you to protect the accounts. It's no secret we're in a high interest rate environment right now as well, and so if you do have excess funds or restricted funds that you can earn more interest on, you should definitely be talking about those things. But regular annual reviews with your bank so that you can talk through what should we have in place, how can we protect our accounts is really important. Verbal verification, again, this goes back to validating with your vendor changes, is calling them and validating it over the phone, not through email, because email is so easy to manipulate and compromise. And then at the end, ensuring fraud prevention tools like Positive Pay, ACH Positive Pay are in place on any account that has any type of transactional abilities on it. So any of your checking accounts should have these tools in place to make sure that you do not experience any losses on the accounts. Okay, so I went through that. It looks like a little fast, I'm a fast talker, I apologize. So I want to open it up to discussion, to questions. Anybody want to either throw it in the chat or just throw it out there?
This is Jody Yang from Family Health Services. We actually have had check fraud 2 different times where they stole our check, got our account number, and signed my name. And it was at Christmas time 2 different years in a row. It is a huge pain in the butt to change all of your accounts and all your automatic deposits and automatic credits and that sort of thing. So anyway, my question is, it wasn't noticed for at least a week and our bank still paid it. Is that surprising to you?
Yes, it is. It is. Banks are less and less likely to do that now because they are recommending these fraud prevention tools. And so it depends on your relationship with the bank. If the bank covered it, they took a loss on it. So I would tell you that is the exception and not the rule.
Okay.
You know, we have covered things in the past as well, but it's less and less likely to happen now because these tools are so available and easy to implement. And if we've recommended on multiple occasions that this is put in place and it's, you know, a pushback or they don't want to, then it becomes, okay, well, now this is on you. It's great that your bank did that because that's fantastic, but I would tell you that's probably not the typical response from a bank, but good for you.
I see there's a question in the chat. Should we keep lower balances in our accounts?
That's a great question, and I would say no. I would say that as long as you're putting these controls in place, you don't have to do anything differently with your accounts. Regardless of, you know, let's say you keep a lower balance in your checking account, but you have a sweep account tied to it that is earning an interest rate or it's an investment sweep. If a check comes through for $50,000, that sweep is going to advance and that check's going to go through. And so there are ramifications to that. So I would say instead of keeping lower balances is to put fraud prevention in place so that you don't need to worry, because even someone getting your account information, they can easily try to take $2,500 from you, which is still a loss you're not going to want to have or have to deal with.
So another question, is it better to send all the payments from the bank directly through the online checking?
So I would say with regard to that, yes. To get away from checks, the more you can get away from paper checks, the better. It's just, I know it's really hard to do that because you need the information of the recipient. You need their routing number and their account number. But I would say using ACH, the direct pay option, is going to, in the end, be more cost effective because you're not purchasing check stock and doing the check reconciliations and printing and all of that. There's a lot of expense associated with an actual paper check. But using ACH is safer. You can have dual control in place, just like you might have 2 signatures on a check, and does end up being cheaper in the long run and more efficient.
I'll echo that. We switched to Bill.com right before the pandemic, and man, it made life so much easier in so many ways.
Yes, Bill.com is a great option, and it will link to your bank account. And so it's not like the debit to your recipient is not coming directly out of your account to them. So they don't see your account number. Bill.com is the one that debits your account. So it's like they're taking your account out of the equation, and it's just your agreement with Bill.com.
You know, and Lindsey, as you were talking, it reminded me a few years ago, pre-pandemic, a NAM employee got scammed into buying a bunch of gift cards. And actually, what I realized, this was a good opportunity that at least once a year, I should review with the whole team. This is what our financial internal controls look like, because then it reminds them, here's the process. I'm not going to email you and ask you to go buy this. this is the process that we would use internally. So that was kind of a good teachable moment.
Absolutely, and we recommend everybody do that. As far as when it comes to, I'm never going to ask you to send a wire through email. I'm never going to ask you to go to Hy-Vee and buy gift cards via email. Like, these are the things that I'll never ask you to do. And if you get an email from me asking that, it's probably fraudulent. So just walk across the hallway and talk to me. We found that a lot of folks get into panic, like, oh, I have to do this, because there's usually like a call to action, a rush in that email, like a rush tone. And so they feel like, oh, if I don't do this, then something is going to mess up and I'm going to lose my job. And so there's pressure put on them on this email coming through. But if they know they're never going to ask me to do that via email, and that's reiterated to them continuously, then you're protecting yourself in that sense.
Yeah, my staff now just says, oh, fake Teresa's out there again when they see things that come through. But I had a question for you. You had mentioned, and I can't remember the details of it, but someone sending you an email that said something, and for most of them, I get what they're trying to get about, trying to have some sense of urgency that makes someone do an action. But one of them, I was trying to figure out what the benefit was to them, and it was one of the earlier ones, and I don't remember the details. Do you know? If someone asked you to do something, you got some kind of an email and you said it to do an action, but I couldn't figure out what they would have gotten out of it.
A lot of the times they're just trying to open up the conversation to get you to respond to them, to trust, and to think that you're talking to a person that is legitimate, and then they work into it. I don't know if anybody's received, weird text messages from people that just don't make any sense, and you're like, this isn't for me, I don't know this number. They're trying to engage first, and then convince you to reply, and then they'll start working their way in. They don't always start with, hey, send a wire transfer to X, or, hey, will you change my account number to this or my address to that. Sometimes it's just getting in the door first and then moving into trying to get you to click on a link so that it takes over your computer, and then they are trying to access bank accounts and financial information.
Awesome. Just for anyone interested, we do what we call know before training, which means know before you click, which tells us some of the things that. So every month we get a new training, whether it's don't click this link, it goes through how people do things. And so if anyone's interested in that type of a thing too.
Do you offer that your,
thing.
okay. And is that something that's an internal program, or does your IT vendor provide that?
Our IT does, and it's just every month it's a training, whether it could be 6 months, 6 minutes up to 30 minutes, 20 minutes or whatever, but it's over a different topic every month.
Great, thank you. Another question on the chat. When we use bill pay through our bank, sometimes they cut a paper check. It's not necessarily ACH if using bill pay.
That's correct.
True?
And that depends. Yes, that's correct. And that depends on the recipient. And so if they can't accept an electronic transaction because they aren't built into your bank's bill pay system, then it will cut a paper check. And that is when it is important for you to have positive pay on an account like that.
Gotcha. Thank you. Any other questions? Well, thank you. This has been interesting, and it seems like just when everybody gets familiar with one scam, you get another. I know our newest one is, hi, I need to change my direct deposit on my paycheck before the next pay period, which ignore those too. So thank you,
yes,
Lindsey.
Please. Yes, you're welcome. I appreciate everybody's time and attention. It was great to be able to join and share the information. So thank you.
Thank you. You're welcome to stick around or get on with your day. Totally up to you. And I think we'll stop the recording now.